Hi, very good evening, ladies and gentlemen. You are welcome to this webinar that we are presenting on taxability of free zones under UAE corporate tax laws. We have been following the corporate tax introduction in UAE since the public consultation document was issued in 2022, and the law was issued in December 2022. We have done around 5 to 6 webinars on this topic, and on 1st of June 2023, ministerial there has been certain clarifications that we have been waiting for very long, particularly on the taxability of free zone entities. There has been a cabinet decision Article 55 that was issued. That clarifies particularly the definition that we all have been waiting for, which is the definition of qualifying income, what it means, particularly with the qualifying income. Apart from that, there has been a ministerial decision 139 that is issued on the same day, which is 1st of June 2023, few days before, and that also clarifies a lot of other concepts. Particularly the qualifying activities, the list of excluded activities, and these. There has been different interpretations that we have been seeing across professionals even on this particular front. So I would like to highlight first and foremost that that the ultimate and final word is from the Ministry of Finance and FTA. What we are trying to present here is our understanding of what the law says, and what is our interpretation of what the cabinet decision and the ministerial decision that is coming out. When it comes to taxability of free zone entities, there are four major important areas that one need to look into. There is corporate tax law Article 3, which defines the taxability of free zone entity. There is corporate tax law Article 18, which defines what is qualifying free zone entities and what are the conditions related to qualifying free zone entities. Then there is a cabinet decision, as I mentioned, 55, which defines what is a qualifying income for that qualifying free zone entity. I know it can get complex. We'll try to simplify it. My colleagues will do this during the course of this webinar. And then there is this ministerial decision 139. So I wanted to highlight this very basic. Now I hand over this to my colleague Karishma, Lara, Doha, and Shadi. Will walk you through different provisions of this law, particularly related to the free zones. So again, a warm welcome to you. Over to you, Karishma.
Thank you, Sheetal sir, and hello everyone. Now let us start the webinar first on a very light note by explaining. I would first walk you through with the benefits that a free zone entities have by running or doing a business in the country. So the very first benefit, there are many benefits in fact what a free zone has if they are running a business into the country, but I would just walk you through the salient or the most important benefits that every free zone would be availing. So very first is the 100% foreign ownership. So if a free zone is running a business into the country, they can have an 100% foreign ownership, unlike the mainland entities. Secondly, there can be 100% repatriation of the capitals and profits from this country to their home country if a business is being run into the free zone. The third and the important one, which everyone has been knowing about, is that as a 100% VAT exemption on import and export whenever a free zone entity is being dealing. They have an independent laws and regulations. Every free zone has its own independent laws and regulations, which gives them an own unique identity. The most important benefit a free zone enjoys is a tax holiday period. Every free zone has a tax holiday period ranging from 15 to 50 years, which gives them an add-on benefit in compared to the mainland entities. And lastly, a free zone entity can apply for a tax residency certificate by with that, they can be avoiding paying double taxes for the revenue that is being earned into the country. Now, as per the corporate tax law, which was released on 9th December 2022, it specified that a qualifying free zone person earning a qualifying income would be benefiting from the 0% corporate taxation rate, and rest income will be taxable at 9%. Now, it was just stated that it was not stated what was a qualifying free zone person and what will be their qualifying income. They have just specified in the law what are the conditions for being a qualifying free zone person. So as per the law, there were four major conditions which were specified for a free zone to be specified or to be declared as a qualifying free zone person. These were, very first, maintaining an adequate substance into the country. Now, what do you mean by an adequate substance will be explained later in the presentation. Secondly, it derives a qualifying income. Again, qualifying income will also is being defined, which I will walk you through later in the presentation. If a free zone has not elected to be taxable at a normal or a standard rate, then also it will be treated as a qualifying free zone. And lastly, if it complies with the transfer pricing rules and regulations which are specified in the law, it will be treated as a qualifying free zone person. And any other conditions if may be specified by the ministry. If all these four conditions, apart from the additional conditions which the ministry would specify, are satisfied, then it will be treated as a qualifying free zone person. On 1st June, when the Ministry Decisions 139 was released, it came up with two more additional conditions for a free zone to satisfy to be a qualifying free zone person. The first condition was maintaining an audited financial statements for a relevant tax period and satisfying de minimis requirements. Now, what is the de minimis requirement will be explained further by my colleagues into the webinar. But if all these six conditions are being satisfied by any free zone, then it gets a benefit or derives a status of a qualifying free zone person, and any qualifying income that will be derived by these qualifying free zone person will be taxable at 0%. If at any point of time a qualifying free zone person fails to maintain or to satisfy any of these conditions, then it will lose the benefit of being a qualifying free zone person and will be treated as a normal tax person for the relevant tax period, as well as for the four subsequent tax period from that effective period. Anyhow, the qualifying free zone person, being a free zone person or a qualifying free zone person, it will be mandatorily required for it to register and file the corporate tax return. Now, once you become a qualifying free zone person, there are certain conditions or there are certain benefits which it loses as they are being given to the other entities which are there, which are there into the country, or which is being specified as per the law. Now, if a qualifying free zone person, if a free zone person derives the status of a qualifying free zone person, then it cannot avail the small business relief of 3 million, which is being applicable on the other business into the country. A qualifying free zone person cannot be part of a tax group. It cannot be part of a qualifying group. And on top of that, if a free zone becomes a qualifying free zone person, then it cannot transfer the tax losses from its one business to another business. And lastly, any business restructuring relief, which is being applicable as whenever a transfer of assets or liabilities is being done or passed on to a third party, that benefits which are being given will also be lost by a qualifying free zone person. Now, as I explained in the earlier slide, that a qualifying free zone person has to maintain an adequate substance. Now, what do you mean by an adequate substance? As per the Cabinet Decision 55, which was being released on 1st June, it was being defined that a qualifying free zone person generating core income generating activities will be treated as maintaining an adequate substance in the country. Along with that, if a qualifying free zone person has an adequate assets, adequate number of qualified employees, and an adequate operating expenditure, then also it will be considered as maintaining an adequate substance into the country, and it will be treated as a qualifying free zone entity. Now, the core income generating activities can be in-house, or it can even be outsourced to a related party in a free zone or a third party to the free zone, but the only condition is that it should be supervised by a qualifying free zone person. Now, the most important and the most hot
Karishma,
topic which
before you
has
go
been
to that,
everyone has been curious about is what is a qualifying income for a qualifying free zone person. The law has specified that certain income, like the qualifying income for a qualifying free zone person, would be taxable at 0%. Let me try to simplify this for you. So very first, if a free zone entity is earning from another free zone entity, all of its income except the excluded activities will be treated as a qualifying income, and the free zone person to whom it is supplying the entity, whom is supplying or providing its goods or services or its income or generating the revenue, should be a beneficial recipient. Now, what is an excluded activity will be explained further into the webinar. Secondly, if a free zone is generating revenue from non-free zone person, then the income derived from only the qualifying activities, which are not the excluded activities, will be treated as a qualifying income. And lastly, any other income apart from the qualifying activities or the excluded activities will also be treated as a qualifying income, subject to de minimis satisfaction. Now, what is a de minimis requirement? So, de minimis requirement states that if the non-qualifying revenue, what is the non-qualifying revenue will be further explained as everything. It will be further explained by my colleague. But if a non-qualifying revenue, which mostly comprises of the excluded activities, and the revenue which is not a qualifying revenue is lower than 5% of the total revenue of the entity or 5 million, then if it is lower than these values, then it will be treated as a qualifying income and it will be taxed at 0%, insofar as the case of the non-qualifying income will be taxable at 9%. But if the entity fails to maintain or fails to satisfy this condition of 5% of the total revenue or 5 million revenue, then it will be treated as a taxable income, and all its revenue will be taxable at the standard corporate tax rate as per the Article 3 of the law. So with this, I would like to end my topic, and now I would like to hand over to my colleague Lara for explaining further about the qualifying and excluded activities as I explained in my presentation.
Yes, thank you, Karishma. Now, my colleague Clara will present from my name because a problem in connection. Okay, thank you.
Okay, hello everyone. Thank you, Karishma. The free zone entity offer a wide range of activities and opportunities for businesses and individuals. The MD number 139 of 2023 define and classify this activity in qualifying activity and excluded ones. Okay, you will see on the screen the list of qualifying activities. A deep dive on this. Okay. I will begin with the manufacturing and processing of goods or materials. Here are some examples that commonly took place in free zone, like electronic assembly, automotive manufacturing, packaging and printing, and many more. Second, holding of shares and other securities. It refers to the ownership and trading of stocks, bonds, etc. Reinsurance services subject to regulatory oversight. I will pass now to the distribution of goods in or from a designated zone for further sale or resale. Example, goods imported to Jabal Ali Free Zone are distributed to different businesses within the zone for resale. Logistics services, including transportation, warehousing, picking, and packaging. Fund management, wealth and investments management subject to regulatory oversight. Headquarter and financing services to related parties. is deemed as qualified activities if and only if it is provided to related parties. Financing and leasing of aircraft, including engines and rotable components. Ownership, management, and operations of ships. The income which is derived from these activities and conducted by a qualifying free zone person is called qualifying income. And here comes an important takeaway. The city rate is 0% on qualifying income derived from qualifying activities listed above. You will see now on the screen the excluded activities: banking as loans, debit card, credit card, POS, etc. Finance and leasing activities, except the ones provided to related parties as mentioned before in the previous slide. Insurance activity, except reinsurance, ownership or exploitation of a movable property other than commercial property located in the free zone. This includes owning or renting residential properties such as houses, apartments. Any transaction with natural persons except the ones in relation to the following qualifying activities as fund management, wealth and investments management services, ownership, management and ownerships and operations of ships, financing and leasing of aircraft, including engines and rotable components. So the activities related to fund, wealth management, or the ones related to ships or aircrafts are always deemed as qualifying activities, even if it's not with natural person. 6, ownership or exploitation of intellectual property assets as trademarks, copyrights, franchising, license, software license, any activity that are ancillary to the activities listed above. The income which is derived from this activity and conducted by a qualifying free zone person is called non-qualifying income. And here, an important takeaway: excluded activities will be subject to corporate tax at 9% rate. In this slide, we will review the classification of qualifying and excluded activities. As we see in the table, the packaging of canned foods and the production of smartphones are deemed as qualifying activities. When insurance company transferring portion of its risk to another insurance, it's a regulated reinsurance and it's a qualified one, but not the same case for premium insurance collection who are deemed as excluded one. Leasing, the aircraft leasing, the first one is the second one is qualifying. And small reminder here, when it's up to ships and crafts, it's all about qualifying activities. And when it comes to the financing service, it's about to whom it's provided. If it's provided for related parties, then it's a qualifying one. And it's excluded one for the not related parties. Okay, that's for today. Hope it was informative. Over to Paul time. Thank you.
Thank you very much, Lara, for this presentation. And now I will hang on to Pratik for a few exciting poll questions.
Thank you, Mohammed. Hope it was very informative. And to make it more interesting for everyone, we have prepared some poll questions for better understanding of what is qualifying income, what is qualifying free zone. Can we have the first question? We have a free zone entity and our turnover is $100 million and we operate with a flexi desk. and we do not have any employees, do we fall under UAE corporate tax? And you need to answer whether this will fall under UAE corporate tax. No, because of a free zone entity. Yes, because of lack of substance.
Pratik, we are not able to hear you. Right?
Yes, they lack adequate substance, and hence this will be under the UAE corporate tax. Can we go to the next poll? I have a free zone entity registered in DMCC. I buy goods from China and do high seas sales to US. Will I be taxed on this income? Yes, no, no, subject to certain conditions. The free zone entity is registered in DMCC and it is buying goods from China and doing a high seas sales to US. Will that be taxed? Can we see what the room has answered? This is very, very complex. So a lot of people feel that it will be yes. The others feel it will be no, and few feel that no, subject to certain conditions. So when you do a high seas sale and there are goods not entering the UAE borders, it will be taxed. But there are conditions to it, and can we move to the next question?
Yeah, Pratik, it is
Yeah.
worth clarifying before we take this next question, that there are three conditions that are set, right? Particularly when defining qualifying income for a qualifying free zone entities, right? Under cabinet decision article 3(1)(a), B, and C. So what A says is any sale from free zone to free zone is taxable. B says that any sale from a free zone to non-free zone entity, then they define they have to be under qualifying activities. So I think this is a shock to many of us, right? That high sea sales are coming under the preview, but it is purely based on the literal reading of the law. And I'm sure I hope there are certain representations made and probably some clarifications that may lead us to different interpretation of it.
Correct.
Yeah. We can take the next question.
Sure. Moving on. I have a manufacturing entity in Zabza, and we sell our goods to UAE mainland entity, as well as the export to some other GCC countries. Do we have to pay taxes on our income? Yes, no, yes, subject to certain conditions. Manufacturing entity is in Zabza. They are selling goods to UAE mainland entities, as well as there are export. What do you feel, whether there'll be taxes on this income? Can we see what the room has said? Yes, 38% say yes. Can I see what the room has said? Sorry. Yeah, 10% still feel it'll be no, and 52% feel yes, subject to certain conditions. So I think these 10% people are still hoping that it'll be, UAE mainland entities income will not be taxed. But if there is substance, they will have to pay taxes. And that is why 52% of the room that is feeling that yes, it will be subject to certain conditions, it will be taxed, are correct. I hope it clarifies that. I want to keep this question open because this is very important. There is a manufacturing entity in Zafza, and I know qualifying activities have said that, when you do manufacturing of goods, it may, be outside the purview. But because it is also selling goods to UAE mainland entities, as well as there are exports, these will be taxable.
Pratik, I think here the key is the answer could be both no and yes, right? Ideally, a Jafza manufacturing entity selling to a mainland entity, as long as the substance is being met, Jafza being the designated free zone, as long as the substance is there, it will not be taxed. And if substance is not there, right, then it will be subject to corporate tax. So I would say the correct answer is no in this case, which the least of the majority of the people are saying. Anyway, moving on to the next.
We are an IT service company based in DSO. We mainly export IT services to US. Does our income fall under qualifying income and taxed at 0%? Yes, subject to satisfying conditions. No, taxable at 9%. We are an IT service company based in DSO, and we export IT services to US. Whether it will be qualifying income. Can we see what the room has said? Yes, subject to satisfying certain conditions. 72% feel that. According to me and to the best of my knowledge, services which are qualifying activities, there have been few services that has been defined which are not going to be taxed, which includes wealth management services, it includes leasing services, but any IT related service should be taxed. And yes, 28% of the room is correct. Sheetal sir, do you feel the same?
Yeah, see, again, the same thing, right? Going back to the three main points which is being mentioned there, right? Defining the qualifying income. When we read this qualifying income under Cabinet Decision 55, it does not cover export of services as part of the qualifying income, be IT services, financial advisory, business consulting, to the best of our interpretation at this point of time. So I hope we all hope that export of services, we were hoping as well that export of services will probably fall under the qualifying income definition, but maybe more clarifications from ministry will help us probably change our opinion on this.
Correct. But currently, as per the interpretation of law, it seems that it will be taxable.
Correct. Yeah.
Okay. Can we take one
Yes,
more poll question, please?
Especially this transaction is with non-free zone person. If this IT consultant, if it is with a free zone person, it will be 0%, subject to 0%.
Correct. Yeah, so I think the last poll question. We run a hotel in DMCC free zone. Are we liable to pay taxes on our income generated from hotel operations? So the hotel is in DMCC and they are earning income. Are they liable to pay taxes? Yes, no, no subject to certain conditions. Can we see what the room has answered? Yes, it will be taxable, and majority of the room is correct, because there is this clause of immovable property, which is commercial and non-commercial. And that is why this will be under the purview of corporate tax and will be taxed. Moving on. Are there any further poll questions? Okay. Over to you, Mohammed. Thank you.
Very much, Pratik. So now we will have our tax expert Doha Harb to explain to us further concepts regarding the taxable and qualifying income.
Thank you, Muhammad. Hello, everyone. I'm going to discuss the cases where the revenue earned by free zone persons are subject to corporate tax. We have the income earned from transaction with other free zone persons related to excluded activities is subject to corporate tax. Excluded activities are the activities between a free zone person that generates non-qualifying revenue. For example, revenue derived from insurance activities, which is in excluded activities, by a company located in a free zone and its clients are also in the free zone is subject to corporate tax. We can notice here that transaction between a free zones person can be subject to corporate tax. We have also the income earned from transaction with non-free zone person related to non-qualifying activities is also subject to corporate tax. So non-qualifying activities refers to the excluded activities between a free zone persons and non-free zone persons. Here, Kamen, we can see that not all revenue earned from transaction with non-free zone person is subject to corporate tax. If it is related to qualifying activities, the revenue is subject to 0% tax rate. We have also the revenue, any revenues earned from transaction with natural person, free zone or non-free zone, except the transaction in relation with ownership, management and operationships, fund management services, wealth and investment management services, financing and leasing of aircraft. Also, we have the income earned from domestic or foreign permanent establishment is subject to tax. The income earned from any person, free zone or non-free zone related to immovable, non-commercial property located in free zone is subject to corporate tax. On the other hand, income earned from non-free zone person related to immovable commercial property located in free zone is subject to tax. So we can see the income derived from, for example, renting out a property located in the free zone, which is owned by a free zone person to another free zone person or non-free zone person is subject to corporate tax. On the other hand, renting out a warehouse or store located in the free zone is subject to tax only if the income earned is from non-free zone person. Finally, we have also if the free zone person fails to meet any of the 6 conditions stated in the Article 18 of City Law and Cabinet Decision 55 to be qualified free zone person, maintain adequate substance in the UAE, derives qualifying income, complying with the transfer price requirement, no election made to be subject to corporate tax, prepare and maintain audited financial statement, and finally the de minimis requirements. Then all of its income will be subject to corporate tax. In this case, the qualified free zone person will cease to be a qualifying free zone person from the beginning of the relevant tax period and for the subsequent 4 tax periods. So I'm going to talk a bit about the 6th condition, the de minimis requirements for qualifying free zone companies, as stated in the Cabinet Decision 55. If non-qualifying revenue counts for less than 5% of the total revenue of a qualifying free zone person in a given tax period, or if it's less than 5 million AED, whichever is lower, then the free zone person is considered as a qualifying free zone person, and its non-qualifying revenue is subject to corporate tax at 9% rate. On the other hand, if non-qualifying revenue accounts for more than 5% of the total revenue of a qualifying person, then all qualifying and non-qualifying revenue is subject to corporate tax at 9% rate. So, to calculate the non-qualifying revenue from total revenue, the following steps should be applied. For the non-qualifying revenue, it should include the revenue from excluded activity earned from transaction with free zone persons, revenue from non-qualifying activities earned from transaction with non-free zone persons. As for the total revenue included, it should include all the revenue derived from non-qualifying and qualifying income. But we have to notice here something, that the revenue earned from transaction with non-free zone person in respect of commercial property shall not be included. The revenue earned from transaction with any person in respect of immovable that is not commercial property also should not be included, and the revenue attributable to a domestic permanent establishment or a foreign permanent establishment of the qualifying free zone person are not included also. And now we're gonna give an example where a free zone person is subject to corporate tax. Please, the next slide. Okay, ABC is in the business of manufacturing clothes and shoes, located in Jabal Ali Free Zone. It derives its income from various types of activities and clients, as shown in the table in front of you. So, ABC sold manufacturing product to juridical persons, free zone and non-free zone persons. ABC sold directly its product, special brand of clothes, purchased from mainland to its clients without entering free zone area. ABC sold directly her special brand of clothes purchased from mainland company to its free zone client within free zone area. And ABC, the last one, sold its manufactured clothes and shoes to a natural person. The total revenue is earned by ABC is 28 million AED. First of all, we have to determine whether ABC is a qualifying free zone person or not. To do that, we need to check if ABC co-satisfied the 6 conditions stated in Article 18 of City Law and Cabinet Decision number 55. Is the entity established in a UAE free zone? Does ABC derive qualifying income? Does she apply the arm's length in her transaction with her related party? Didn't elect to be subject to corporate tax? Did it prepare and maintain audited financial statement? And the de minimis requirement. We're gonna suppose here that the 5 conditions mentioned are meant by ABC. Cool. And we're gonna test the 6th condition, de minimis requirement. According to Article 5 of Ministerial Decision number 139, an entity meets the de minimis requirement if the total amount of its non-qualifying revenue does not exceed 5% of its total revenue, or does not exceed 5 million AED, whichever is lower. So I'm going to classify the revenue between qualifying and non-qualifying revenue. Sales of manufacturing product to free zone person and non-free zone person is a qualifying revenue. The manufacturing of goods is a qualifying activity, so the revenue generated from this activity is considered as qualifying revenue. Revenue earned from the sale of a product, special brand of clothes, purchased from mainland company and sold directly to client without entering free zone area is a non-qualifying revenue. To consider the sale of product as a qualifying income, the goods should be distributed in or from designated zone. And here the goods are being sold directly from the mainland. Revenue earned from selling a special brand of clothes purchased from mainland company and sold to its client within free zone area is a qualifying revenue because the goods are sold in or from the free zone area. Revenue earned from selling a manufacturing clothes and shoes to a natural person is non-qualifying revenue. Any transaction with natural person is considered as excluded activity, except the transaction in relation with some activities, which is not our case here. The sale of manufacturing goods are not one of them. So the total amount of non-qualifying revenues is 6 million AED. So the percentage of non-qualifying revenue to total revenue is 6 million AED divided by the total revenue, which is 28 million AED. So the percentage is 21.43%, which exceeds the rate of 5% and the amount of 5 million AED. So we can see in this example, ABC Co fails to meet the de minimis requirements. So we cannot consider it as a qualifying free zone person. So ABC Co ceased to be a qualifying free zone person from the beginning of the tax period in which it fails to meet of any of the conditions. And all its revenue, the 28 million AED, is subject to corporate tax. Thank you. We'll give the floor for my colleague Shadi.
Thank you, my colleagues, for presenting most of the issues related to the taxation of the free zone persons. You really made my task easier now.
Thank you.
After the issuing of the two significant and most talked about decisions, Cabinet Decision number 55 and Ministerial Decision number 139, we can conclude that the concept that we had before or that everything now is being clarified and clear in the new decisions. So we can know which are qualifying activities and subject to the rate 0%, and which are excluded activities or non-qualifying activities and subject to the corporate tax rate at 9%, which is the standard rate. I want to begin by 2 points after the example of my colleague Duha about the permanent establishment. Permanent establishment, as we all know, that it's a place of business or other form of presence of the qualified free zone person outside the free zone area. It's the same concept for the permanent establishment for the non-resident person in the UAE, as the corporate tax law in the Article 14 mentioned, and as the article mentioned in the Article 5 of the tax treaties between countries, the treaties of double taxation. Same concept here, the permanent establishment, which is out the free zone, any income derived from it is subject to the corporate tax at the standard rate. As we see in the slide, free zone person, we have domestic permanent establishment or foreign permanent establishment, any income is subject to the corporate tax. And this permanent establishment treat it as a related company to the free zone person. So here we want to apply the transfer pricing rules because it's a related party. Next slide, please. Another point is about the immovable property. Can we move to the next slide? Yes. The immovable property in the free zone area is two kinds. There are two kinds. First one is the commercial immovable property. When any income derived from this commercial property and another party is a free zone person, this income is qualifying income, and this income is subject to 0%. Otherwise, if it's a transaction with non-free zone person, then any income, even it is from commercial immovable property, it will be subject to the corporate tax at 9%. And according to the immovable property, which is non-commercial means any property for residential or like hotels or apartments, furnished apartments, any person, if the free zone person derived income from any client, which is a free zone person or non-free zone person, this income is subject to the corporate tax at 9%. To clarify all these points, we will go now to the example, which I chose an example about an insurance company, which has two activities, which has an activity for insurance activities and reinsurance activities. As we see in the article or in the ministerial decision number 139, we find that insurance activities are excluded activities and reinsurance activities are qualifying activities. In this example, we see that the income derived from the insurance activities are 900,000 dirham. And the income derived from the reinsurance activities are 40 million dirham. Here we want to see which is subject to the corporate tax at 9% and which is subject to the 0%. Suppose that all the conditions, which are 5 conditions, adequate substance or derived qualified income, or as my colleague Duha count before, suppose that they are satisfied and we want to make now the test for the de minimis requirement. Here, as we see that the de minimis requirement at the end, it is satisfied. So in this case, this free zone person will pay the 9% on the non-qualifying income only because he is a qualified free zone person. To continue the example, we find other kinds of income like income derived from consultancy, which is number 3, from consultancy service related to reinsurance activities. Even it is reinsurance activities and it is qualifying activities, but because it is with natural person, so it will be subject to the corporate tax at 9%, because for the natural person, there are 4 exceptions, which reinsurance activities is not included between these 4 exceptions. Number 4, there's income derived from brokerage and training services, which is related or attributable to a permanent establishment. And this, as we said before, this 3 million dirham will be subject also to the corporate tax. And we treat here the PE, the parent establishment, as a separate entity and pay on this income corporate tax at 9%. Number 5, rental income derived from a commercial property, which is a warehouse in DIFC and owned from the free zone person. And the transaction is with the free zone person. So this is the only case that it is a qualifying income because it is with a free zone person. The next one, rental income with non-free zone persons, so it's non-qualifying income, and the income derived from this rent is subject to corporate tax. Number 7, which is an immovable property as a residential, which is apartments located in the DIFC. This income, irrespective the kind of the client, natural or juridical person, free zone person or non-free zone person, this income is subject to corporate tax. To continue and test the de minimis requirements, we find that the qualifying income, if you go to the next slide, please, the total of the qualifying revenue is 40,500,000, which is from the two kinds of income as we explained before, and the non-qualifying revenues, which are from insurance activities, consultancy with natural person, and income derived from permanent establishment, income derived from non-free zone person on commercial property, income derived from any person on non-commercial property. All these income, the sum of this income are 4,550,000. If we divide it by the qualifying income, this is wrong because we want to exclude some components of revenue. Let us how we make this test. The non-qualifying revenues, we exclude from it the revenue which is related to the permanent establishment, which is 3 million. And we exclude from it the revenue which is attributable to the commercial immovable property derived from non-free zone person, and also the revenue which is from the commercial immovable property derived from non-commercial, immovable property derived from any person. We find that the income which will be divided by the total income is 1,050,000. And these components, 3 components that we exclude, also we excluded from the total income. After we make this calculation, we find that there are 2.53, which is less than 5%, is for the non-qualifying revenue. And for sure, this free zone person is a qualified free zone person. He will pay tax on the non-qualifying income, which is 4,550,000, and the 41,550,000 are subject to 0%. This result is because he is a qualified free zone person. He paid only on the non-qualifying revenue. Not everything is subject to 0%, but the revenue, which is non-qualifying revenue, is subject to 9%. Thank you. Hope that this example give you the clear ideas about the new decisions, the cabinet decision number 55 and the ministerial decision 139. Thank you.
Thank you very much, Shadi. Now I'll leave the floor to Fadi to give us a few ideas regarding the ERP tax system requirements.
Thank you, Mohammed. Thank you. Hello, everyone. This is Fadi Damaj. I'm an ERP consultant. We would like to let you know that our services extends to ERP consulting. And as you may know, regardless of the ERP that you may be using, we want to make sure that it has the compliance and the expectation, it delivers that expectation based on this new taxation rules. On a nutshell, any ERP that you're using, it should provide actually the tax calculation rules. It should be capable of handling all the complex tax rules and calculation, including the ability to apply appropriate rates, exemptions, thresholds, and all of the other types that my colleagues was explaining. Also, for the tax reportings, your ERP system you expect your ERP system to generate the accurate tax report required for the compliance, including all the summaries, the detailed tax calculations, and the transaction level tax information. The other one also, we should basically, the ERP system should be compliant, and you should have the mechanism to manage the tax code effectively, includes maintaining up-to-date tax rates, tax code, and tax authorities. In some cases, ERP system will need to integrate with a government portal to submit electronic files into the government portal that relates to tax, and automate and streamline the process of exchanging data with the government portal. Also, the ERP system that you're using currently or looking to implement a new one for that purpose should definitely have an audit trail or log change to trace the history of all of the transactions and the changes. Keep historical data in a safe, place where it cannot be removed at all, and also provide a document retention capability to store all the tax related documents, such as, of course, invoices, receipts, tax filing, etc. Of course, if you have, there is a localization, specific localization and multi-currency support, your system should also be localized for the UAE and supports multi-currency. The last also point that relates to the tax, it should be compliant with the updates going forward with the new updates and maintenance, because all the tax regulations are subject to change. So ERP system should be flexible enough to receive the regular updates and maintenance to stay compliant. Okay, including updating tax rate, tax code, and other relevant tax-related information as per the latest tax laws. I would like to also say that we are Microsoft partners. We do implement Microsoft ERP Business Central. Used to call Navision. So if you use Navision or Nav or an older version of Microsoft ERPs, and you're looking forward to upgrade because it doesn't comply anymore, or it's rigid, doesn't update to the latest tax, also with all other new features that we have. This is something we do. We implement from scratch if you are using Microsoft or looking to use Microsoft. The other part is actually consulting. If you're using any other ERP system such as SAP, Oracle, and you're looking for a consultant to implement this into your ERP and streamline the tax process and generate the expected reports, this is also something we do. Thank you, Mohammed.
Thank you very much, Fadi, for this explanation. I will give back the floor to Pratik for some more poll questions.
Yeah, as the webinar progressed, I think, it was very important to understand what is the excluded activities, what is the qualifying activities, and what is taxed in free zone and what is not taxed in free zone. As Sheetal sir mentioned, what is very, very important to note is what is the main criteria which has been defined. One is free zone to free zone, which is generally not taxed, free or will qualify for your qualifying income. Free zone to non-free zone persons subject to qualifying activities is qualifying income. And if you meet the de minimis requirements, it will be qualifying income. So taking few more questions from there, can we have a question, please? Can we have the poll question? We are an interior designing company based in DMCC, and we mainly deal with individuals, homeowners in JLT area. Is our income taxable at 9%? An interior designing company in DMCC dealing with individual clients, is the income taxable at 9% or not? Few seconds for the answer. Can we have the answer, please? Or see what the audience has said? Correct. 86% of the individuals who have answered here are correct, because specifically in the excluded activity definition, it has been said that any transaction with natural person will be excluded and will not qualify. So therefore, it is correct. Moving on. I have a company registered in Zafza, and we mainly trade with other free zone entities in UAE. Does our income from other free zone entities fall under taxable income? Yes, no, no, subject to certain conditions. The company is registered in Zafza and they trade with other free zone entities in UAE. Can we see what the room has answered? %42% of the people who say no, subject to satisfying certain conditions, which is generally the beneficial recipient, you're correct. It will be no. And because again, in the qualifying activities definition, it has been clearly mentioned that if it is in and from the designated free zone, it will be. So correct, no is the right answer. Can we move ahead? We have a free zone entity in DMCC, which is qualifying free zone in DMCC, and have a branch in mainland. Is our branch income taxable? Yes, no, as branch financials gets consolidated with the parent. A DMCC qualified free zone entity having a branch in mainland, whether the income will be taxable or not. Can we see what the audience has said? Correct. 88% of you are correct. It will be taxable. Can we move ahead? We have a boutique technology service firm registered in DMCC, which is a qualifying free zone entity with annual turnover of 2.5 million dirhams. Are we eligible for small business relief and pay no taxes in UAE? Yes, if elect for normal CT rates. No, because of a qualifying free zone entity. Yes and no, both. So DMCC technology service entity, which is a qualifying free zone entity with an annual turnover of 2.5 million dirhams, whether it can claim small business relief. Can we see what the room has answered? Yes, if it elects for normal CT, that is 48%. No, because of a qualifying free zone entity, 28%. Yes and no, both. I think according to best of my opinion, it is yes and no, both. Because if you change yourself and you change your status to a normal CT payer, 3 million is the small business relief. And if you do not, if the services are from qualifying activities and are not excluded, again, this will be not liable for the corporate tax, and hence the answer is yes and no, subject to the conditions. Sheetal sir, would you want to add anything here?
No, it's important to mention that for free zone entities have that option, or that have that flexibility if they want to subject themselves to the 9% tax rate and don't want to be under the qualifying free zone status. So once
Correct.
you subject yourself, once you elect yourself under the normal tax rate, you are eligible for a small business relief.
So just to discuss this a little further, Sheetal, would you feel that small business entities who are doing probably less than 3 million dirhams turnover, should they opt for corporate tax? I know it is a very tricky question, but should they opt for normal corporate tax so that they can get the small business relief?
See, small business doesn't remain small all the time, and at least they don't intend to remain small all the time. But yes,
Correct.
from the case of it, it looks like if it's a 3 million dirhams revenue, then they have a clear advantage of 0% tax rate, which they don't have if they opt for qualifying free zone status. Because in qualifying free zone, once you opt for a qualifying free zone status, then your qualifying income will get taxed at 0%. But however, non-qualifying income will get taxed at 9%. Even if it is 100,000 dirhams of revenue, which is non-qualifying, it will get taxed at 9%.
9%.
Why?
Correct.
For if you elect to be a small business relief and elect not to be a qualifying free zone entity, then you get up to straightforward up to 3 million. You don't have any tax liability.
Correct. But in future, just the only thing is they cannot change status again when they cross the 3 million mark. So yeah, it's a very cautious call that free zone entities will have to take, whether to elect for corporate tax, normal registration or qualifying free zone. Moving ahead, I have two companies in UAE, one mainland entities where all the employees and office exist, and one free zone entity. Can I book all my income in free zone entity and claim tax relief? Yes, no. Can we see the answers that the room has elected? Perfect. 91% of the people feel no. I think there are still 9% people who feel that they can book all the income in free zone entity. But yeah, to the best of knowledge, you cannot, and you have to keep it separate. Can we have the next question?
I think it is important to mention here economic substance, right? I mean, you need to have an economic substance wherever you are booking the income in order to qualify to be a qualifying free zone entity.
Correct. Can I move ahead, Siti? Yeah, I have 5 companies registered, all in free zones. Do I need to plan for UAE corporate taxes? No, I don't need to worry, as UAE corporate tax is not applicable on free zone entities. Yes, I must have a tax advisor to help and guide. What does the room feel? Just because all the 5, should you not appoint a tax advisor? Can we see what the audience feels? 92% of the people feel yes, they need to. Yeah, because it is a very complex topic. And as mentioned, it is still, a shock to us, even because we believe that few income will be taxed, which suppose export of service is for that matter taxed. And yeah, so therefore you need a tax advisor to guide you through the entire process of what is qualifying activities, what is excluded activities, what will not qualify. So yeah, over to you, Mohammed. Thank you so much for this opportunity. I hope there is a lot more clarity.
Prateek, before you hand it over to Mohammed, I think let's take two or three Q&As, if you don't mind, since we have 5-10 minutes more.
Correct. Sure.
So I'll start with one of the comment from Mr. George Dudas. He's saying, what about trading? I think we have covered this in one of our poll, but I am taking it again, right? Just to clarify the concept. What about trading? a qualified free zone company is buying equipments from China and selling them to Europe, is this activity taxed at 0% or 9%? So, Shadi, you want to take this?
Yes, thank you, Mr. Cheetah. Here's goods or the materials that this company sells. This did not enter to the free zone area, and there's a condition to be qualifying income. The sale of these goods, it must be in or from the designated zone. So when this company purchases the goods from outside, for example, from China, and sell it to another country without passing inside the designated zone, it will be subject to the corporate tax at 9%. But if this company, if this free zone person import this goods to the free zone area and work on it, or make a something addition to this goods, or and then sell it even inside or to export it, it will be in this case a qualifying activity, and the income derived from this sale is subject to 0%. But as the case without passing in the free zone area, it will be corporate tax at 9%.
Yeah, well summarized, Shadi. In fact, we have to look into when we arrive at a taxability at 0%, right? The law is very clear and law is very strict when it comes to definitions of qualifying free zone entity, qualifying income, and qualifying activities. So looking at the current definitions that are provided, it does not fall into the qualifying activities list, right? And that is the reason that the high sea sales, which lot of trading companies based out of Jebel Ali, DMCC, and many other free zones, they do transshipment business, which unfortunately, based on the current interpretation, it doesn't look like that it will get that 0% tax advantage. Anyway, I hope we'll get more clarifications on this from Ministry in order to take a firm view on this. But at this point, this is what it looks like. I'm looking at.
Can I take the second question, sir, for you?
Yeah, take. Yeah, you pick and choose.
Yeah, there is one question from Ahmed. He says, if a free zone is doing export, such as exporting goods from China and sending it to Egypt without entering or touching the UAE borders, where only the payments are received in UAE, will it be applicable for a 9% taxability?
I think
we covered this in our presentation, but yeah.
I think this is the same question we have taken for George as well, the immediate before as well. So I think the answer remains as well with this.
Correct. So there is one question from an anonymous attendee who says DMCC company 100% sales and purchase from overseas. Again, I think it's the same, but it will 9% apply in spite of the tax-free holiday. So again, we have covered this. Yeah, these are the major questions that were there. And rest have been answered.
I think, particularly this tax holiday thing, I think it's worth clarifying this. The law, when it came in December 2022, it says that we will honor the tax holidays that is being provided by various free zones, 15 years to 50 up to 50 years, right? However, it said that the law mentioned that in respect to qualifying free zone entities earning qualifying income, right? So it will only give you tax holidays only in respect of certain categories of income. So taking on to this question, the answer is that if your free zone has promised you a complete tax holiday, it does not necessarily mean that you will get it. You will get it only from the only for the incomes which are defined as qualifying income in the city law. I think, Pratik, it's worth taking this question. Somebody is writing here, we are a crowdfunding platform in DIFC and having SPV in mainland. Do revenue is subject to corporate tax? And Shadi has answered this, but one thing is for sure, where anything that you do in mainland will be subject to tax.
Correct.
Anything that one's do in mainland is subject to tax, right? And when it comes to activities from free zone, right, then any dealings between free zone to free zone is exempt, correct? Any dealings from between free zone to free zone, whether it's goods or services, right, is part of the qualifying income.
Yes, and if any transaction with non-free zone person related to qualifying activities, it will be also subject to 0%.
Correct.
But
correct.
It must be explicit and clear in the activities which are qualifying activities.
Perfect. Bilkul. Well said, Shadi. So it doesn't look like that crowdfunding is under the excluded activities list. So if it is a dealing between outside the free zone and also deals with, if at all, individuals, as we natural persons, as one of the poll question clarified, any dealings with natural person will be under preview of the corporate tax at rate of 9%. I hope it answers this.
Correct. So I think we can hand it over to Mohammed for his word of thanks.
Yes, listen, thank you everyone for joining us this evening. We hope you found this webinar useful. Stay tuned, as you will be conducting another webinar after the Eid break, specifically on the interrelation between tax, IT, and ERP. Until then, take care and have a nice evening.